our daily recap. If this is your very first time tuning into a ShortMeTina video, we want to say welcome. Do us a solid, drop us a comment in the comment section. Again, these videos are totally free. All that we ask is that you engage and comment, give us a bit of feedback, let us know how we are doing. If you are returning, as I always say, thank you so much. You really are our lifeline here. All right, what is our mission here? Let's kick it off with our mission statement. Our mission here is to build a powerhouse of successful traders and help you find more winners. We conclude, if you win, we win. For that to happen, we are asking right now, identify for us, pardon, there's some construction going on, but again, we ask that you identify for us right now in the comment section. Let us know what your biggest frustration is in reaching your trading goals. Again, in the comment section, let us know what's the difficulties you're having right now with your trading. And before we continue that, or moving along rather, ensure, and I do not know why it's not linking. If you're having a difficult time accessing the 3 pillars of successful trading, make sure you are subscribed at our website, ShortMeTina. Make sure you're part of our mailing list. We will definitely get you out that video. In the meantime, I'm going to try to link once more what I believe to be are the 3 pillars of successful trading. Again, ensure to watch that video. I think it covers a lot of grounds, and granted, it might be theoretical or conceptual, but I think it's a good base and a good start if you are a new trader. And considering that we just wrapped up the second quarter, we just wrapped up June, we're starting July, you want to have metrics in which to, judge yourself based off of. And so I would encourage and implore you to review your performance. That way you have something to, again, measure going forward, or a benchmark to compare yourself against. And I will also link the metrics in which we use in order for us to measure our performance and to see how well we are progressing or how well we are not progressing. I think that reviewing your performance, again, is a must. All right, let's kick it off with the recap of the overall markets. All right, let's kick it off really briefly with a review of Bitcoin daily chart. Again, it's up about 1.5% on the day. We remain in that 10,000 area. Remember what I said, that should serve as the new floor. I mean, granted, if we dip a little bit below 10,000 and we're trading in the high 9,000s, that's fine. As long as we don't get to 6, 7, 8,000, have a hard time rebounding quickly. Like if we somehow, again, I'm just theorizing here or presenting different scenarios. If we were to get like a really swift pullback to that 5, 6, 7, 8,000 mark, as long as we don't hang out there for more than a day, I think that should be okay. But ideally, you don't want it penetrating too much below 10,000. Again, if we see a print in the high 9s, that should be okay. I don't think we're going to hang out there in the 10,000 for too long. I see 13 to 14,000 as a possibility in July. If we can get above 13 and 14,000 with very little ease, not only is 20,000 around the corner, but I really think that this can reach 100,000. I know that it sounds very outlandish. I've seen claims upwards of 1 million, and believe it or not, I buy into that. However, I don't want to, go there yet because we're still at 10,000. So first things first, let's get to 13 and then 20 and then eventually 40,000. For me, it's simply a matter of supply and demand. And despite all the negative news that has been circulating for the past, let's say 9 to 10 years about Bitcoin and cryptocurrency, we still find ourselves here in 2009 trading above 10,000. Most recently, we hit 14,000, coming very close to all-time highs. That should tell you demand for Bitcoin. So disclaimer, I am long with a 2019 price target, believe it or not. At minimum 40,000. I can see 100,000 with a really strong bull market. What else? All right, the SPY. Past 2 days, so far so good. We closed at 296.44. What are the levels that I'm paying attention to? I'm paying attention to 293 to 295. As long as we can stay above there, things look really good with the S&P 500. I'm going to talk a little bit about where my concerns are coming from, but despite that, I still believe that the trade is on the long side. Again, as long as we can remain above resistance, which we're doing a great job of so far to kick off the third quarter. That number is 293 to 295. As long as we can stay above there, things look great. My only issues and my worries, I will talk to you about them right now. All right, worry number one, as I've expressed as I've expressed in the past at least, is the IWM. Again, we're having a very difficult time penetrating 160, and considering what's going on not only in the cryptocurrency market, taking into account that the S&P 500 is reaching all-time highs, I do not believe that the IWM should be at 155 right now. At minimum, we should be above that 160 mark, that level we haven't really seen in almost a year, dating back to October of 2018. We have not had a meaningful push over that 160 level, or at least a sustainable push over 160. Again, in May, we got above 160 and closed above that area for about 2 consecutive trading days. Outside of that, we have not traded above those levels, and that is concerning for me. Granted, it's great that we're above this shorter term support of 148 to 150, but sitting here at 155.15, I think at least to start off July, we should be, if not at 160, at least at 159, 158. We're not even doing that, and we remain a bit from all-time highs. So that's concern number one. Concern number two. All right, concern number two, you have gold, right? Up about 2% on the day, closed at 133.41. This chart is a daily chart dating back to 2013. So about, if my math serves me correctly, so you have gold breaking out more or less out of a 6-year base. Why are investors fleeing to gold? I don't know. The gold trust actually looks very bullish right now. Again, breaking out of a multi-year base, trading at prices we haven't really seen since 2013. Obviously, it's all about stability. So that is concern number two. Other concern. And then you have Walmart daily chart up a little bit north of, or rather a little under 1% on the day, closed at 111.60. Again, trading at levels you haven't really seen since 2018. This chart goes back to 2017. You can see it here. Walmart is breaking out another defensive stocks. Why are investors fleeing to defensive stocks? Those are my concerns. Walmart is looking relatively and rather bullish here. Again, I had a price target, or I have rather a price target of around 120 on Walmart. These are my concerns. What is going on? All right, and you have another defensive name like Coca-Cola daily chart, trading at a 51.98. Another stock that I noticed earlier on, because we actually took this trade. I think we gained about 8 or 9% on this particular trade. Another stock that I noticed that investors are fleeing to. It's a defensive stock. Why are investors fleeing to defensive stocks? That is my only, not my only, I identified a few reservations. Those are my reservations with the SPY hitting all-time highs. Me being bullish because of that, but there are other things, some other concerns that are giving me a huge and a big question mark within the market. What else? XLU utilities, another defensive stock that investors seem to be fleeing within. Again, closed at $60.29, up about 1.3% on the day. Look at the chart, trading at levels we have not seen since 2000. Again, why are investors running to these defensive names that I've just identified, like Coca-Cola, Walmart, gold? IWM continues to have a difficult time penetrating that 160 level. However, the SPY is hitting all-time highs. You have Bitcoin showing a bit of action. Those are my reservations. I will be obviously continuing to monitor these defensive names, and you should as well. What else? All right, and then we have ticker FCEL. Let's get back to penny stock land. Daily chart is up about 127% on the day. Congrats to the bulls. You can see the volume pouring in extremely well here. We closed at 55 cents, but I see an after hours print of 63 cents. So if you're looking to take a trade on the long side, you have to see, in my opinion, what goes on in pre-market trading tomorrow. If you wake up and the stock is, again, it's running, it's at 70 cents, 80 cents, and it opens up below today's close of 55 cents, and 55 cents more or less can serve as the floor, chances are you have a stock that could potentially put up another 100, maybe even 200% this week. But again, the trick is pay attention to what goes on pre-market and see where the stock opens up. What else? And then we have ticker Puyi, daily chart off about 28% on the day to close at 10:02. The low clocked in at 9:55, so we got a little bit of a bounce on the stock to close again at 10:02. Again, you can see confirming volume here, sellers stepping in. I wouldn't write this stock off completely yet. The chart overall looks fairly bullish, at least in the intermediate term. The shorter term, you might have a bit more of selling. So if you're long or you're looking to get long, obviously I'd be paying attention to today's low of 955. If we take that level out, meaning we break that level and it has a hard time rebounding, chances are you're going to see a bit more selling. But again, if 955 can serve as the floor, meaning the low, the chances are I think you can actually get back to the highs of 14 in a relatively short period of time. But for me, I'd probably let the dust settle for a few days. You'll always get a chance to jump back into this stock. What else? All right, so let's wrap it up and round it out with ticker Ovid. I had a bit of a continuation today. The stock was up nicely yesterday with a close of around 231. The video that I did yesterday, I said, well, let's pay attention to where the stock actually opens up. If it opens above 231, chances are you might have a bit of a continuation. If it opens up below, you may have a bit of a sell-off. And today we opened up at 237, effectively opening up above yesterday's close of 231, and we only went as low as 235 today, hence why you saw a little bit more of a push, and the stock actually went to around 280. I thought $3 was in the car, but 280, fair enough. Stock pulled back to close at 252, so we're hanging around essentially this support area. If 250 cannot hold, then we break. Chances are you're gonna have a sell-off. If you're long and you're looking for this stock to turn on more, the key, in my opinion, would be for it to trade above, let's say, 230. If it can stay above 230, I think the bulls remain in control. So that's kind of it. A little all over the place, especially in the beginning with things that are giving me a bit of concern in the markets. Again, markets are hitting all-time highs, yet you see that there's a lot of defensive stocks that are trading at 52-week highs or breaking out, like gold, Walmart, utilities, Coca-Cola, etc. But that's it. Let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, do 3 things for me. 1, comment in the comment section. 2, head on over to our YouTube channel at ShortMeTina. Subscribe. I do videos Monday through Friday. If you like what you heard today, make sure that you are subscribed. And 3, I've been trading for well over 15 years. If you think you can learn anything from me, then head on over to ShortMeTina.com. Sign up. Become a member. Thank you for listening. And as always, thank you for the support.